Hey, good morning. Hey, I just noticed that it wasn't streaming music. Thought it was. Sorry about that. Anyways, welcome to Forex.Today. The YouTube community of more than 19,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis. Huh? Boy, I look terrible. That's one thing about being on camera every day, right? Every day. Huh? 0.01% less good looking. 20 years later, you're like, who the hell's that guy on the... Anyways, hey, good morning. Well, it's still holidays. Market's still thin. 10-year T-note still at 1.5-ish. But right now I'm looking at yen weakening, dollar weakening. That's great, but Kiwi's weakening. Aussie's kind of weak. CAD has been strong, weak, and then doing something. So we're all over the place, but at least Swiss franc is weak. So let's get on with it. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hey, hey, hey! So yeah, we got a great opportunity to be a trader today because traders trade always. Thank you for being here. Thank you for subscribing. Thank you for leaving comments. Please click the thumbs up button if you appreciate me being here during the holiday week. And also please visit Tradersway.com and show them your loyalty and respect as a means of saying thank you for the education. Yeah. So if you appreciate these webinars, show it. Visit Tradersway.com, open up a demo account, and maybe, just maybe, they earn your loyalty and respect. So that when you're ready to trade real money, because you've found the confidence, perhaps, from the training in these webinars, then you're like, you know what? I'm going to open up a live account at Tradersway. Think about it. Their whole business model is based on your success. If you like that business model, if that makes sense to you, you think it's good business, then Tradersway.com. Now we're over here. Yen just got even weaker, which is really nice. Okay, pound just took off like a rocket ship. Just jumped 20 pips in, I think, a minute. Wow. Okay, so let's take a look. Let's get on with it. Okay. Aussie's kicking off our roll reversal off the 4-hour 21. Kiwi is kicking off the 4-hour 21. This is that beast that just took off. Not off the 4-hour 21, but off the cycle level and off the daily pivot. Euro's taking off. It's Oscar Mike off the 4-hour 21. And the kitty cat kicking off the 4-hour 21. Do you see a pattern? Okay. Okay, can you see the pattern? So far, out of position swing trading is working well, and day trading, you can see sort of a basic day trade here for pound, for euro. There's a lot going on if you're sort of in that day trading realm and swing trading. Okay, taking a look at here, 4-hour 21 for the Great British Pound. Once again, that's a basic entry. Okay. The next basic entry is quite a bit lower down in here, but right now we're just riding that 21 on the 4H. Makes sense to me. Euro, upsy downsy. This is what we did, gee whiz, a week and a half ago. We had this when we were down here. Because remember, I think this was Sunday last week. We had this rising back up and then down. And that's generally what it's doing. Now, you might read into this a little bit and say, oh, well, this is an M2, therefore M4. Well, that might actually be the case. That might actually happen. but that's not really how you would set this up. That's sort of, you know, you're noticing ice cream sales are up, so that you're saying, therefore, it's going to be a hot day today. No, it's a hot day today, so therefore, right, ice cream sales will go up. So what I'm saying is it's correlation or causation. You know, the thing is, this is not a trend. This is a range. And if you were buying this and expecting that's straight out of the training course in a bullish trend. This is not a bullish trend, so therefore that might be happening, but that's sort of a mirage, if you will. It's not necessarily. I mean, somebody might actually be doing it, because you can see somebody sold here and someone's buying here, and that's what you would expect. But that's what you would expect in a trend. So maybe this will trend, but you should still have this trapped, because even though it might trend, it's not trending, therefore it ain't trending. You know, you don't want to read into it too much. Here we go. This is much different situation. This is the up, the down, the up, the 100% retracement, which sucks, then back up, and now we're kind of moving sideways, but maybe sideways in a new range. Okay. So again, the first goal here is 72.5 up into the top of the range. Now that gets us into a bearish sell zone for next month. So be cautious about that. And USD Kitty CAD. Once again, I wouldn't read too much into this, because yes, we have this big down. The sell zone is up here, which never actually happened. The buy zone is here, which didn't actually respect. So there's no sort of market support here. It's going to be more price. And so in that case, I would trap this and kind of like just say you're the monkey in the middle here. This is sort of the top. This is closer to a bottom. And just be careful right now. That's all. Because selling should be here, and we didn't quite get there. Okay? And then even if you were buying here, it's mediocre. It's it's just mediocre. Yep. Take a look here at commodities. Okay. Oil is still moving upward, trying to ride this 4-hour 21. You'll want to keep your eye on that today. Remember, it's not the current 4-hour 21, but the future 4-hour 21. Okay. So you're thinking something like this. What? So one thing you could do is you insert indicator, custom, zero lag, moving average. And I guess you can do it that way to give you a guesstimate. Okay. And it's telling you you're pretty close to where it is, where it's going to be in the future. Okay. Cool. So that is, if it gives you a bid, that is definitely risk on. Brent is doing essentially the same. Take a look at gold. Gold is actually down. Interesting, huh? Okay, interesting, right? What have we done so far? Not a lot. Like, for example, here's the bottom of December, here's the top of December. 1762, top here is 1820. Okay. Okay, a $50 range in the month of December, and yet we have 7% inflation. And $50 out of, $1,800, right? Or 50 over 1,800 is small. Okay. XRP, whoa. Yep. Broke right through the bottom. There's no bulls. No bulls. That's it. That's what that means. Remember, this one said if you're in a believer of the upward momentum, then there's two places where we were, which was actually a neutral zone. Okay. Or down here at 87.5. you had to believe in that first. Remember, this isn't a prediction. It's based on how do you enter your trade plan. So if you were planning something like that, what I was saying is down here is a pretty interesting place to look for some up. Okay? Or here to look for some up. Well, now that we're down through both of them, there ain't no up until you get down to here. And even that, you'd probably have to do something like that. Well, Martinez, if you take the training course, even the free training course listed in the link below, for example, Martinez, you should know that, like Martinez, my book, my frickin' book, I wrote it down. It took me a year. I wrote it down. And the whole basis of the book, Martinez, is you buy off this 21, you buy off this 21, you buy off this 21. So what am I going to say? Look, it came down to the 21, which was yesterday's trade plan, or even Sunday's trade plan, down to the 21. Okay, so you have to understand me before you start heckling. Okay, I wrote a whole book based on this. So now that it's happened, I'm assuming you know. Okay? Okay? Now dude, just piss off, dude. Take your negativity and disappear. I'm trying to enjoy my holiday, Martinez. Yes, I wrote a book 20 years ago so I can get filthy, stinking rich. That's correct. All right. Boy, spoiling my holiday. So again, the whole basis is kicking off the 21s. I'm assuming you guys know that. So now, let's go through the basics then. What happens after that? It's going to make a new higher high. Then you drag this across and you buy the next, what I call a roll reversal, which is most likely also a future 21 EMA. So now that it's happened, okay, you see what I mean? Dude, like now that it's happened, what do I say? Okay, you understand that point? That's already happened. If you were here yesterday, I drew this, right? I drew all these lines. Here's the roll reversal from yesterday, Martinez, right? So I have this, you drag it across. So I covered it yesterday is also the other way of looking at it, Martinez. Okay, yesterday I drew this. So now that it made a higher high, now you buy it, but now it's done it. So now you got to wait for the next higher high, higher low. Okay? Okay? So I look at this and there isn't actually a trade anymore. It's already occurred yesterday, but that's what yesterday's trade plan was. So if you want to know the future, Martinez, is if it makes a higher high, which I don't know if it will. Technical analysis says it's likely to. So check this out. Tomorrow or the next day, Martinez, you'll probably end up buying it here if you're a bull, which now this entry, which again was done yesterday and the day before, will produce a higher high. And if it does, you want to buy the higher low at what we call a roll reversal. What is currently resistance becomes support. So now it comes down here. And so there's Thursday or Friday's trade, Martinez. Are we cool now? But Martinez, if you want to make me filthy, stinking rich, you can buy my training courses for $77. 60 hours of training videos of me teaching you how to do this. And that's me getting filthy, stinking rich on $77. Okay? Oh yeah, baby. Huge money. Okay? I'm standing in hot tubs. I'm pouring champagne into the pool. Right? Yeah, I'm so rich, man. Okay? That's it, man. That's the gig. All right. Cool. So anyways, yeah. So that's happened, which is great. Yeah. Well, I think Martinez is maybe because you're just logging in, even though I've been doing live streams since YouTube was a startup that Google hadn't even bought yet. You should already understand my fundamental bias. I'm here every day. Okay? You understand? So on March 20th, you ready for this? Okay, March 20th of 2020, I declared I would be a bear on USD for 5 years based on fundamental analysis. Okay, write that down. Okay, on top of that, Martinez, we have seasonality, which is similar to a business cycle, but inside of a year and not inside of 10 years. Okay? So, inside of seasonality, I'm a bear on dollar. Typically in December, I'm a bear on dollar as well. So you should see that. You should already know that because England is raising interest rates and the US dollar the US is also going to raise interest rates, based on that information, I would buy the pound and sell the dollar. You should know that. Okay? I talk about it every day. The other thing you should know, Martinez, is in January, I'm planning a decoupling of this fundamental flow of capital. So, based on sort of this period here of, let's say, January 1 to, let's say, April 1, typically, right, or let's say generally, okay, generally, US dollar would be weak, okay, in the scope of the next 5 years based on central banking policies. Okay? But inside of seasonality, dollar will gain strength. So you could look at this like, I don't know if you want pound dollar, or euro dollar or something, but let's just say this downward flow from January to April could lead to what I would call intermediate. It's more than short term, but it's not long term. Intermediate, that wasn't quite what I was going for. But based on seasonality, there could be more dollar strength than the general assumption of fundamental trend over 5 years. So even though 5 years the dollar will weaken, in this sort of 3-month period, what I expect is, let's say euro dollar down for 3 weeks, then a false rally for a week, week and a half, then another move, and then probably a big move, and then some steadyization, and then more of a resumption of longer term, seasonality and fundamentals line up better in early April. Okay? Martinez says, so no trades until you... What? When do I trade? Typically in Asia. Okay? Okay, typically in Asia. New York, I'm usually taking profit or moving stops. Okay? So, no. So you have to, right? So right now, for example, let's go to some yen dollar pairs, for example. when would most of these trades have occurred? So let's break this down slightly differently. Let's do sort of a daily and then get into sort of an hourly here, okay? Do I want that there? I guess we can do it that way. So the first thing is we start on a 4-hour chart, and you got to mark your line. So at the beginning of the day, it was about here. Okay? So you have to have that in the back of your mind because we call this dynamic support. And it's probably the most important time frame for a day trader. So you have to understand at the opening of the day, you're probably thinking about this price. Okay? We'll mark it here. Okay? So again, that's the 4-hour 21. We're above the 4-hour 21. So get ready for this, Martinez. I'm going to pitch my book. If you buy it, I make $5. Getting rich quick, man. Getting rich quick. Okay, so 18 years ago, I wrote down on a piece of paper that you want to buy off the 21. If price is above the 21, you are bullish and aggressive. Greg says, so that would mean that you start watching the market 78. I don't stop watching the market. I'm cognizant of it all day. But the beginning of a day to me, Greg, and it has always been this way, is 7 to 8 p.m. So again, so when let's say 20 years ago, okay, 20 years ago, I had to have my pivot points programmed because there were no pivot points available. Back then, it was even before MetaTrader was even invented. You have to think about this. All the way back 20 years ago, I needed pivot points, and so I paid a programmer to develop the indicator for me so I could install it on my deal book. Okay? And one of the things I did back then, Greg, is I defined the day. So for daily pivots, you have to define, well, when do you start a day and when do you end a day? What is a 24-hour period? And I started it at 8 a.m. Tokyo time, which is 8 p.m. New York time. Okay? So it's always been, that time of day, Greg, has always been the beginning of my day. And that's when most of my trades are made, at the beginning of a cycle. So whether it's a Sunday, which is the new market open, I'm going to swing trade that. If it's the first day of the month, I'm going to position trade that. Okay? Or if we're, just a typical day, then I'm day trading that. But they all begin basically that time. Okay? So anyways, going back to this, you have to understand if we're above the 21, we're bullish. That's it. Okay? So from there, everything else is technical analysis on a smaller time frame. Okay? So you could see like this idea of the down into that 21 and then the up. So when do you actually buy? Do you buy here? No. Do you buy here? Maybe. But that would be pretty aggressive. Okay, after the higher high? Yeah, for sure. Because now this is that roll reversal I just talked about on a higher time frame. Okay. So now that we've kicked off this 21, what's tomorrow's trade plan, right, Martinez? What's Friday's trade plan? Something very similar. Something very similar. So where's the 21 going to be tomorrow? Well, let's just pretend we can guess that. Let's make this out to maybe here. Okay? So what we don't know is, will it make a higher high? Okay? Now, ideally, this makes a higher high, which then will pull this up even steeper. You see what I mean? So tomorrow's trade plan would be very similar. Let it make a higher high and buy on tomorrow's future 21. Okay? Now you say, well, it's hard to estimate where that is because it's so far out into the future. Well, also you could use your daily pivots. This would be an estimation, right? So let's say up, 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 down, down, buy. Now, the reason the higher high is important because that hasn't happened yet and we don't know if it will. This S1 predicts that we won't, by the way. But nonetheless, let's say we make a higher high. What will happen is it'll drag this central pivot up a bit. And that will make basically this role reversal tomorrow's buy zone if it makes the higher high. Okay? Now this S1 says be careful, 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 careful. Okay? Be careful, be careful, be careful. It says on a daily basis, it's less likely we do actually make a higher high. Isn't that interesting? This says we don't, although the 21 does, it says we do. We will. The 21 says we'll go quite a bit higher. Okay? But maybe not today, right? But nonetheless, if it makes the higher high, then we're going to get a higher low somewhere near this role reversal. Now, if it doesn't make the higher high, then what we're probably going to do is come down and then kick off this future 55, which won't be here because remember, it's slowly moving to the right, but it's also moving up because of the positive slope, right? M is greater than 0. So therefore, this is going to move up a little bit, okay? So you'll see that we'll probably be here tomorrow, and that will change. Okay, that'll change things. What will it change? It will change, well, first of all, it'll change the slope. It'll still be positive, so you're still a bull. But what it means is we're caught on this as support, we're caught on this as resistance, and we may be walking in, at least on the short run, over the next day or two, range bound, right? Okay, so I can give you the fundamental on this. Great British pound. Okay, they're raising interest rates. Okay, so that should be positive. Okay, the USD is not raising interest rates yet. We're still tapering. Okay. And, okay, so let's say like we have the short run. We have the rest of this week, which is, okay, this one's difficult. Let me talk about this one. Okay, so here we are. If you're talking about long run economics, the dollar will weaken. Okay, money supply is still going up. Even though interest rates are rising, they're rising not even to neutrality. They're not going to rise above 3%, and yet we have 7% inflation, right? So we're not even getting to neutrality. So in the long run, money supply is going up, and interest rates are significantly below inflation, which means real interest rates are crazy negative. So all of that is, right, is dollar weakness. But the thing is, 2 weeks from now, okay, dollar may be strong, okay, based on rebalancing. Okay, it's a mechanical part. It's not technical, it's not fundamental. It's sort of a mechanical part of the capital markets, including Forex, because it's not people rebalancing their foreign exchange portfolios, but they are rebalancing their investment portfolios, some of which can include overseas investments, or will now include foreign, right, overseas investments. For example, a wealth manager in the United States takes their portfolio which has 7% Apple in it. Okay, they reduce this to 4.5. Okay, so they sell off some Apple stocks. Then they have cash. Then they look at the valuations of other companies in the stock market, and they're crazy expensive, but they decide to invest into Germany. You see that? So in that case, there's a rebalancing, and the Apple sale doesn't change the value of the dollar because all they're doing is going to cash, but then they convert their cash, which means they sell off the dollar and go to Germany. But there's some other things going on here where they rebalance not just one stock in their portfolio, but their entire portfolio. So I look at portfolios a lot, okay? And what you'll see is top 10 holdings, you'll see like they'll own 7% of this company, 5% of this company, 4% of this one, 4 of that one, 3, and so on. And then, right, these are percentages of the portfolio. And what they'll find is like, several of these, they want to actually go to get some cash, right? So they cash out of the profits. They wash any negative. Okay, so some of these, this like 3% of this portfolio, this might be a losing stock. Okay, so anyway, so they go to cash and then they convert and they do some other things. But what you might see is in January, you might see, let's say, a 7% decline in the S&P 500 because of rebalancing. So what do you think would happen if in the first 2 weeks of January, the S&P 500 fell 7%? Thank you, Arve. And by the way, Arve, right, I just want to make clear, 10-year T-note at 1.52 would point to a weak dollar. Okay, great. So what do you think would happen here, guys, if in January, in the first 2 weeks, week 1 and week 2, we combined, we have a 7%. Yeah, sorry, it's my new phone. Okay. Well, not just buy it, but the issue is with the dollar. So the dollar would go up. My point here is this is not fundamental. It's not fundamental. Okay? It's mechanical. Because rebalancing is something that money managers must do. Okay? So yes, I would take, right? I would expect dollar to gain some strength. And by the way, I have cash. I've been piling up some cash to buy the S&P 500 if this happens. Okay? And then we got to fart around through tapering, okay? And I think there can be some dollar strength related to the taper, although maybe we finally figured it out and we're all good with it. But based on seasonality, I'm not guessing. This is not a guess. Okay? It's not a bet. If you look at January over the last 20 years of Januaries, okay? More often than not, US dollar goes up. Okay? And that's what I mean by seasonality. Okay? You see? So I have to look at that and say, well, fundamentally, so let's say in 2022, US dollar weakens. But in January, dollar gains strength. Okay? February, dollar loses some value, but not all of it. And then March, dollar's strong again. Okay, I want you to think about why. Well, the Fed meeting, the end of taper, and the masturbation around these things. But once that is done, okay, so taper over, the next part in April, May, and June, I'm going to talk about rate hikes. Okay? And that makes me want to sell the dollar. And a lot of you won't understand that. A lot of you will disagree with me. And that's perfectly fine because that's what trading is all about. You don't have to agree with me. I don't have to agree with you. Most likely, if we do our job well, we'll both make money. So I don't need you to agree with me. You don't have to agree with me. I don't have to agree with you, but we can respect each other and appreciate each other. Right? So anyways, wowzer, what a great day. Just a quick look at exotics, and then we're out of here, man. We're out of here, Bubba. Okay? Second chance at, right? This is Maida's trade. She called this last week, by the way, in the swing trading group. Okay? But look at Rand. Rand getting crushed. Crushed, man. So South Africa is going to need to raise some interest rates, right? Raise their interest rates some more. Okay. Gold will move lower in January, you assume? Well, it hasn't moved at all. Let me just go back to that. Let's just end with that. Let's go back to commodities here. XRP, no. Bitcoin's down, by the way. Okay, let's go back to here. Let's just bust this out. Okay, bust this out. Generally speaking, okay, generally speaking, okay, if you want to look at this as a bell curve, okay, meaning how much of the price action is on the high price, how much price action is on the low price, and how much is in the middle. These are very skinny tails. Does anyone remember the word for this when we're talking about the tails of the normal distribution? Wait for it. Kurtosis. Yeah. Okay. Kurtosis. Kurtosis. I just want to see if it's in here. Let's see what this is. Kurtosis. Okay, see? Where skewness differentiates extreme values in one versus another, right? Kurtosis measures the extreme value of either tail. So in this case, there's lack of extreme. I wish they gave you the math. Okay, so anyways, most of the time what I'm saying here is basically nothing's happened. Okay, so this red zone and this green zone, okay, those are price action pivot points. And you can see that we've moved one standard deviation to above and below, but you can see that the standard deviation is quite small. And so gold falling, but relative to everything else, because remember what we do it's relative to everything else. Based on what I see here, you're probably better off, even if you think gold is going to fall. This is telling you gold hasn't done anything. Okay? This tells us that gold, based on what it used to do, so look, if you're looking at these pivot points, okay, this is the M3 is the high of the year, M2 is the low of the year. What this is telling you is relative to 2021, 2021 has done, statistically speaking, nothing. So I would translate this for someone that says, oh, I think gold's going to go up, or I think gold is going to go down. I say, oh, great. I don't know how you get to that conclusion, however, because statistically speaking, nothing has happened at all. So why would you say nothing happened, right? Statistically now. Because let me show you something different. Based on what happened last year, the assumption is if you were a bull, we should be at 2,400, right? Right now. Or if you were a bear, 1,200. And we're neither closer to here nor there, but also look, we were here, we were here. Then we tightened up and we tightened up, and then we're tightened up even more. It's even more and more or less. Now you might say, well, Wayne, if you use your Bollinger Bands, the Bollinger Bands are tightening, making a tunnel, and there's going to be a giant breakout at some point. Well, I think you're leaning too much into a guess. Then I would rather say this. What will happen in 2022 to change this? Okay? Because look, you could argue this was a floor, and then this was a floor, okay? And then what? This was a ceiling, and then this was a floor. And to me, it's getting tighter and tighter and tighter. So I want to know, if we've gone from these other extremes to now this, what will be different next year? Well, you'll say, well, there will be less taper. Well, and then no taper. But is that affecting this? Okay. Here's what I think, and here's how I explained it last year. This move was central banking purchases. So this was an artificial move, so to speak. So now you'd have to get this down, you would have to have all the central banks sell their gold and buy back their currencies, which would appreciate their currency, and I don't know if they want to do that. The second thing is these central banks would buy more gold. But why would they do that? Because that would probably be inflationary, because yes, they'll have more gold in their central bank vault, but the downside is their currency will be worth less. So I would just pause, right? I would just pause before having an opinion, because I don't know where the opinions come from, okay? And I would say, you know what? Even if this does fall, and you're right, if this falls, let's say 5%, I think if you did something else besides trade it, you'll make 20%. There'll just be something better to do. If gold goes down, something else will go up more. Okay. Due to interest rates, higher expectations, I assume will move. I think that's an oversimplified model of the past. I think if you opened a textbook, it might say something like that, but it'll also tell you you should have 40% of your money in bonds. And of course, that's ridiculous as well. That's for your grandpa, okay? So that's all. Like, just be careful. I would be careful of anyone that says nothing has happened for a year and a half, but now I expect something amazing to happen. And I would say, okay, well, if you want gold to fall significantly, okay, I need you to tell me why this has changed. Okay? Now, during this period, dollar is weak from the rally in the stock market. So that would push gold up. Okay? And then in here, this has to do, first of all, the downward move in gold. Let me see if I can click in. Okay. This downward move in gold isn't gold. It's the dollar strengthening on a flight to safety because of COVID spreading globally. Then the central banks responded by buying gold to devalue their currencies. Okay, and then what? Okay, well, that's the question. Then what? You will need to get the central banks to sell their gold. So I'd rather you think that way. Okay, see, this idea of don't think interest rates up and therefore gold will fall, will come down. Now you got to be careful because what you're telling me is interest rates up in the United States, dollar strong. But see, I disagree with that. So then the next part is, even if that occurred, who's selling gold? If it's not the central banks, then you're going to need to say traders. But a lot of the traders have moved over and they're selling Bitcoin, but they're not selling gold. So I'd just be very cautious of the old assumptions. And this is not just to you, this is to everybody. Be very cautious about the old assumptions. Let me give you another example. Interest rates are 7%. Inflation, big I, is 7% in the United States. Okay? Rates are expected to increase by 50 to 75 basis points. That's the assumption. Right now. This year. And then next year, probably, let's say, to 1 to 1.5. Total, not total, like up to, right? And then the year after, let's say interest rates all the way to 3%. So this rates are going up, they're going up, and 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 you're going up. You see? This is what is already being priced into the market. And yet, the 10-year yield is 1.5%. Not 3%, not 5%. Not even 2%. And we have 7% inflation, and we expect interest rates to go up at least 2% in the next 3 years. And yet the 10-year yield is stuck. So I would rather you say we were at 1.75% this year, and then it went down to 1.35. Okay, and now we're at 1.5. I'd rather you look at the yield on the 10-year and then maybe translate that into gold. Not interest rates, okay? But again, I would say that you could argue inflation is similar to devaluation. And if the dollar is less and there's inflation, interest rates will have to go up. But what's the other side of that? Well, if there's devaluation, the US dollar will fall. Especially if the UK, for example, is raising in front of us. Okay? So, for example, UK 0.5. US 0.25. And then UK 0.75. Then US 0.5. And then UK 1%. US 0.75. You'll see that it's not just that they're raising, but relative to what? By the way, New Zealand will be raising, and Canada will be raising, right? Korea raising, and emerging markets will be raising much faster. Okay? Czech just raised interest rates by 1%. By 1%, not to 1%, but by. Okay? So just be careful. That's all I want to say. Just be careful with the assumptions. Focus more on the research, okay? And focus on the understanding. So why didn't gold do anything this year? Why just that range? Well, what you have to then say, well, why did this happen? Okay? This is, let's say, retail, and this is institution. Okay? And so what will you need for this to go up or down? Well, you'll need institutional come in and buy it up and buy even more gold. I'm not sure if that's going to happen. By the way, I gave a 2022 outlook to all FX Bootcamp members. So I already talked about this in a different way, but in a similar fashion, that I don't expect institutional to come in and drive this up to 3,000. Not under current market conditions. If there's a zombie apocalypse, maybe. But what would make all the central banks dump their positions? Well, they would want to increase the value of their currency. So maybe the crazy inflation? Crazy inflation in India, crazy inflation in Israel. Okay, you see what I mean? So so why? Okay? Just don't think about what your granddad taught you about money. Okay? If you're reading a book from 25 years ago, things may have changed. Okay? So anyways, food for thought. I hope that was an interesting conversation. Martinez, did you make it all the way to the end? Greg says Japan got hit by a snowstorm, everything shut down. Well, it comes down to whether they require capital or not. And so that's probably not enough, right? All right, cool. Are we good, Martinez, or are you going to heckle me tomorrow? Okay? My goal, Martinez, isn't to tell you what is going to happen, although I do provide lots of technical and fundamental analysis. I'm not going to put you into those trades, but I set those trades up yesterday and the day before. So you should know to buy at a 4-hour 21. If you don't know to do that, then you don't know how to trade, and you need to listen more. Not you, just everybody. But I am trying to encourage a sort of a desire to understand why the market moves. Okay? I want a desire for people to want to do research, to want to plan trades in advance. I want people to desire to hold on trades longer. I want people to have a conservative, repeatable methodology towards their approach in the market, and not reliance on YouTube gurus, and not reliance, right, on anything else but their own research, right? Well, okay, let me hang on to that one a little bit. Martina says you don't believe the fundamentals are tradable. Well, again, I want to make the right, news is not fundamentals, by the way. And a lot of people make that mistake. Okay? So fundamentally speaking, like I said, from March 2020 to, let's say 2025. Oops, 2025. Okay, I suspect, okay, and this is based on the Fed raising interest rates, by the way, that when I sell the dollar, okay, I want you to think about it this way. When I sell the dollar, I will hold longer each trade. So let's say every time I sell the dollar over the course of those 5 years, my minimal goal is 333 pips. Okay? Okay. The second part of this is there's seasonality. When there's times in the year where I won't believe that that's possible. But that's not fundamental either. So news is not fundamental. The central banking policy is fundamental. And then inside of that, you have business cycles and you have annual cycles. And there's even political cycles, but we don't need to go into that. So what it means, Martinez, is I want you to think about it this way. Okay, it's fundamentals and seasonality will give you a better idea when to hold and when to exit. When to be long-term, when to be short-term. Okay? And it'll help you place a valuation on your trades. When should you get out with 99 pips? When should you get out with 333 pips? And inside of that, most of the time it'll work out relatively normal. Most of last year, okay, 2020, most of last year was very normal and very predictable. And I mean, I was calling things out to specific weeks of when to kind of go big and when to get out and go neutral and adjust your expectations. Okay? Now, it doesn't give you individual trades, but it gives you things like within specific weeks, I knew when to sell the dollar hard and when to stop selling dollar hard. And when to start selling yen hard and when to stop selling yen hard. And then in between those weeks, when to sort of be neutral-ish. But the key point is changing expectations. What I didn't predict was Omicron. Okay, Omicron was an exogenous shock, a black swan. And what it ended up doing was taking out the fundamental trends and leading us into more, in some cases, news-driven days, where I walked into a day where the UK makes an announcement, boom. Like, that's it. Or you're doing this for a few days, and then all of a sudden there's a spike in COVID cases, and then boom. Right? But that's quite different. And that price action had a lot of fear and a lot of disagreement in the marketplace. There were days when the stock market was down 4%. But typically typically during this period of time, the stock market would be doing plus 2% days. And we would be, the S&P 500 would be going up and up in November, December. But instead, NASDAQ was down 4% in a day. You're like, oh. So there was that maybe 6 week period of not fundamental and not seasonal. Okay? But, but still, just those things, whatever you want to call it, it just wasn't fundamental per se. Not what I mean by that is like central banking divergence of policies and stuff. You might say, well, it was risk off. Well, but the risk off was very, very, very unusual, statistically speaking. But it did happen. And what that told me to do was go to protection, right? Yeah, Steve, like for sure it added more uncertainty, okay? And all of a sudden you'd have big 4% down days because of some news, not because companies were not profitable, not because investors, but just think about that. Like, why would the stock market drop 4%? Well, because most corporations were not profitable. Shoot, they were way profitable. Or maybe spending was down. No, spending was up. So you had this but it was, part of an exogenous shock. Exogenous, okay? Okay? That's not a Y, just my mouse did that. So it's just like, whoa, that was the weird part. But the year was actually very normal, and we traded it very well. Okay? I wouldn't say perfect, but like I said, it was very predictable based on, again, fundamentals and seasonality. So cool. Okay, cool. So again, the goal here is for me to convince you that these things you can learn and you can understand. And there's times when they work very well. And then every once in a while, there's a singularity in the price time continuum. Okay, all of a sudden you find yourself in a black hole of fundamental analysis and even technical analysis, and you get unique results. Just like you're in the center of the black hole of space-time, you can find yourself in the center of a black hole of price time. So that's all. Okay? Cool. So anyways, peace on earth. May the pips be with you. May our profits be above average. Have a wonderful day. Cheers.